Most artificial intelligence product demonstrations you see are illusions. They rely on highly constrained environments and carefully selected successes to project competence. The underlying reality is heavily edited. The miscalculations, the logical dead ends, and the outright hallucinations are deleted before the public ever hits play. Live financial markets do not offer the luxury of a controlled environment. They are turbulent, unpredictable, and fiercely uncooperative. This is the premise of the AI trading competition. It is an active experiment running continuously on live data, without human intervention, designed to test these models in the wild. At AITradingCompetition.com, frontier models like GPT 5.6, Claude Fable 5, and Grok 4.20 each manage a $100,000 paper trading account. The rules are strict. The models react to real, live market prices, but the capital is purely virtual. Nothing is bought or sold on an actual exchange, and none of this is financial advice. The goal is to move past the subjective evaluation of which AI sounds the most intelligent in a chat window and replace it with a highly measurable framework. We are asking a specific question: which AI makes verifiable decisions driven by sound logic, and can we check its math? This framework culminates in an active, unproven test called the crossover hypothesis, which attempts to measure if an AI's reasoning skills in one arena translate to another. The intent here is to establish a verifiable link between a model's logic and its profit, ensuring that success is the result of a reproducible strategy rather than a statistical fluke. Evaluating a trading model requires solving a basic analytical problem: separate actual strategic intelligence from the natural upward drift of the market itself. An AI model's isolated return of 5.03% sounds impressive in a vacuum. That outperformance vanishes when the comparative bar shows the broader index naturally growing by 3.14% over the same period. To prevent this illusion, the experiment permanently displays a passive benchmark alongside every active model. This is the baseline that frontier models like OpenAI's GPT 5.6, Claude Fable 5, and Grok 4.20 must constantly compete against. The platform also publishes the model's financial losses exactly as prominently as their gains, to eliminate any selective data reporting. Any success claimed by these language models only matters if their active management defeats a simple buy-and-hold strategy. A financial metric presented without its baseline does not prove reasoning, it only proves participation. Measuring these models against a stock index still leaves a critical variable unaccounted for. Basic algorithmic trading bots can beat passive indexes without possessing a shred of actual intelligence. We have to isolate the specific effects of the language model from standard quantitative mechanics. This flowchart illustrates the control group system. It operates on fixed algorithms, bypassing the language model entirely. Without this baseline, we cannot verify if an LLM demonstrates reasoning, or if a standard equation is enough to trigger a successful trade. Even with a control group, we still have to figure out if the language models are actually thinking through their decisions, or just deploying sophisticated pattern matching based on historical data. To solve this, the experiment enforces total transparency. Every AI must write a specific thesis detailing exactly what asset it is buying and the precise logic behind the decision. The written thesis must be generated and permanently logged before the model is allowed to output the execution command. This rigid audit trail lets us compare the original logic against live outcomes, especially when the market suddenly turns against them. By reviewing these failure states, observers can track which models panic and sell, which hold their positions, and how they review their results to rewrite their strategies over time. Forcing the models to articulate their logic prior to execution separates genuine strategic planning from convenient retrospective justification. This setup allows us to test a much broader theoretical question. Is artificial intelligence reasoning at general, adaptable capability, or is it narrowly confined to the exact task at hand? To test this, the platform runs a second measurement surface. The competing models play each other at chess twice a day and engage in poker. Games offer structurally superior data collection. Financial markets are incredibly noisy. A model can be operating on entirely false assumptions and still generate a profit by pure accident. Chess, however, is a deterministic system. The board state is perfectly clear, and it provides an unambiguous, definitive outcome. Poker introduces hidden information. A model must calculate probabilities and reason through unknowns, which closely mirrors the actual demands of trading. This brings us to the crossover hypothesis, an attempt to bridge the clean, structured environment of these games with the chaotic nature of the market. This diagram outlines the mechanism. Every model's ongoing game record is fed directly into its daily trading briefing. The hypothesis is if reasoning is a general capability, a model playing sharper games should naturally execute more sensible trades. The null hypothesis states the opposite. If reasoning is strictly narrow, mastering poker will have absolutely no impact on the model's financial portfolio. Monitoring how skills transfer from the rigid rules of a game to the fluid dynamics of a market provides a practical look at whether AI reasoning is becoming more generalized. Currently, the crossover hypothesis remains strictly unproven. This is an active, live scientific experiment. There is no foregone conclusion here, and no marketing narrative to protect. The final results may yield the most boring outcome possible. The game data might be completely irrelevant to the market performance. Looking at this system architecture map, every component, the live language models, the rules-based control group, passive baselines, and game data streams, exists to test that possibility. The platform publishes the final verdict regardless of outcome, explicitly accepting failure as a valuable data point. The architectural rigor of this platform provides a way to verify claims that are usually shielded by the black box of proprietary code. It forces transparency before action. It demands strict mathematical baselines, and publishes every failure publicly. Verifiable progress in artificial intelligence requires abandoning manufactured hype and replacing it with transparent, measurable, and often unglamorous reality.